Welcome to Trading Lounge and the daily US stocks for Friday, March the 11th. This is the S&P 500 on a 5-tick chart, and yesterday we just noted that we could confirm that the move up in indices and therefore stocks is corrective, because we've had this impulse wave here, this impulse wave here, and this corrective wave here took out the low here. This was the same for the Dow Jones as well. So it made whatever was going to happen over here as part of a corrective rally. So what we're looking for with stocks, just generally speaking, is that we've had this move down. We've had this, well, we can look at this as an A wave, a B wave, and a C wave. It's hit our target for our stocks. So it's a little bit rough here, but we can look at this as 5 waves down here, and then we're looking for a 50-60% retracement level in this market roughly, and then we'll see another move down at that point, and so on, continuing to move down. Okay, so that's what it's going to be like for stocks, and this is just the triple Q here, so this is just another way to look at it in a bigger picture. So in this case here, the corrective rally was this ABC into the box here, and then coming down from that point. So in this case, we can look at this little move down as a little impulse wave, looking for some sort of rally, and then down again from that point, you know, in its own way, you know. So that's basically what we're looking for within all of this. So this is Apple here, starting on the stocks now. So we've got this ABC pattern that we were looking at yesterday, and now we've got this move down. So we haven't really got a rally here just yet for this, but may not get it, but anyway, some sort of retest back, and the process is further down. Okay, so with a lot of these stocks, you can just now short these lows that are coming in. So we expect Apple down at 150 to find support here, but also expecting it to come down a bit, excuse me, a bit further on that. And going into the next one here, Amazon. So yesterday we were looking for it to move back to the this little box in here as a wave 2. They're doing a stock split, as you probably know. But still, I still think that we're on the right track here. So we can look at this as a little A wave here, B wave here, and then we're looking for 5 waves up. So we could get another little move up here for this before seeing further downside. So just be a little bit mindful of that. If I've made a mistake here with this 1 and 2 here, looking at this as 1, 2, then my mistake will need to be that we need to put this all the way over here, and then the rally will come just a tad higher into this 61.8% just in here. So yeah, not a huge deal, but worth mentioning. So yeah, so this could end up being wave 1 down here for that. That would be my mistake. Okay, but look, even if I was totally wrong, you would still need a classic trading levels pattern to go long on the 3000. So before you can go long, you'd need to be able to visually see that you've got tested support on that level. Otherwise, you're just buying trouble. So moving on a little bit. So with Alphabet here, we're looking at from wave 3 here as an A wave, a B wave, and a C wave down for wave 4, but we need to look at this as wave 1 and wave 2, and then down for wave 3, 4, and 5. So we've come down once again for 1, and we're going back for 2, so we're expecting the next session to move down. You know, Friday's got a bit of a habit of being bullish in a bullish market, but are we in a bullish market? Not really. So yeah, we can sort of look at the reverse on a bullish weekly cycle. So it's still further down for Alphabet. And the bigger picture here for Meta, we've got from the top here, we've got wave 1 and 2, and we're going down for wave 3. That will bring us down. And once we've got that into play, we've got wave 4 and wave 5. So we'll just go in and have a look at this. This will make a nice sort of short trade here, because it's sort of, you can see it's banging its head against the major trading level 2 there. So I'll just go to 100 ticks. So yeah, we've just been tracking this down, and once again this moved down through here. So we're seeing a little ABC rally that could take us back up to, it's probably finished actually as an ABC to that point there, but let's just give it a bit of work here on that. Well, it's at the 50%, so yeah, it's good enough really. I don't even need to fill that in, so we know what it is there. So the safe trade, of course, will be taking the B wave out here, so as an A and a B and a C, that one there. Or you could draw a line through here if you wanted to, and when we do that, it doesn't mean that you just go straight through it. You need to just sort of let it come down, bounce off it, because it'll have a bounce, and then come through it, and then retest it at that side, and then draw a line across it, and then short that low. And you know, don't do it, you know, like you can see that it's at 193, so you could also refine that as well, in that you could just put, because that's 3 is a very important number, so you can just draw a line across here and then look for a classic trading levels pattern at that point. Or you could short this little move down here, you could short that low, and then look to add with a classic trading levels pattern under the 193 there. So in simple terms, you might get something simple if that was the number 3 here, and then shorting it this side. It just makes it a little bit safer. You don't always get the best price, and you don't always get a nice clean pattern like that. If that was a 93, this is the most common pattern where it comes through here and then finds its way back above here again. But it's left you with that residue of that last low here and that second low. But then you start working this side, looking for another classic trading levels pattern in this little tiny pattern here. And if you're taking these lows out too, just check to see what price point you're working with over here, because you need to gravitate to the closest largest number and then work that, because when it comes down to here, for example, it's going to come down and bounce back, isn't it? You know, so when it bounces back, then you can work it again. So it's a matter of just working it and working it, you know. But yeah, anyway, that's Facebook as such, so we can look at that coming down further. So that looks a pretty good, because see the other thing here too, see how it's retested this here. So it's come, you know, it's been a bit of a snaky journey across here. But in a way, what I look for to myself, you know, even though sometimes I don't understand it, and you may not understand it, you have to ask yourself, if you're going to short, is the closest largest number, has it been retested and rejected? You know, and when you look at it here, it hasn't. I mean, in here it has, so you could do that. But it's still really the arrival point at this stage. So, you know, out of all of this pattern here, this is the first time with this retest here that it's actually setting up to go short. So it's the right time to do that. Okay, Microsoft, so pretty simple. From this B wave here, we're looking down. I did have it as an A wave yesterday. I think I may have done that. But anyway, as wave 1. I think I talked about this too, but anyway, wave 1, ABC for 2, and then down for 3, 4, 5. So yeah, once again, we talked about going short under this low here. We can bring it up to this low, but once again, we can use the 280 here. And all of this is group 2 here, and if group 2, if this group, because when we're working with 300 here, the closest largest number, we've got group 1 above to pin the market down to the 300, and if the 330 becomes the tested support with the classic trading levels pattern, well then we can go long. Group 2 here pins the market back to support back to the 300. If that becomes the retested resistance, then we can go short. So we're not in a short position yet. So knowing that, but we think that the pattern is going to take us lower, So then you just need to trade less, and you'd need to look for a classic trading levels pattern on here. So we could look at this as the arrival, the reaction, and then the first low below the level, and then there'll be a move back up. And if it comes down after that, well, then you can get a position there. And it doesn't have to be a full position, and you could do the same again on the 72, because you need to manage your risk, because otherwise you could get caught like this, but third time lucky perhaps. And then once the 65 becomes the resistance, then you know that it's been rejected, and you know at that point that it's not just rejecting that 265, it's actually rejecting this one here. It's the point where it fails. And then of course when it hits the 50, it's going to bounce at the 50, and normally you would just expect it to come back to the 60 at least, right? But it can come back to the 65, so you always play for that. So if you've got trades in here, if you've got this trade here, your stop would be above the level, and this trade here, your stop would be above the level, and this stop here can be above the 72 once that becomes the resistance. But you can't bring your stop in this space here between 50 and 65. You can only bring your stop into this space when the 50 becomes the retested resistance down here. Okay, so then you can look to, short at this point. So when that becomes the retested resistance, then you can bring your stops from the next levels down to these levels, and you might want to short again at that point. So you basically can end up with a lot of short contracts in here, but you've always only exposed yourself in a very small way, and you just keep building in like that. And look, to be honest, the 80-20 principle, I forget, it starts with an P, doesn't it? Pareto's rule. When you've done thousands of trades, you sort of understand that that 80-20 principle is right, because when you're going for trends, you may only get 20% of them. So that's 2 out of 10 that you're going to get, basically, So that's why you need to manage your risk until you get those 2. Alrighty. Tesla, we're going through the same thing again with Tesla. It's possible to have a low in here, as we've mentioned before. I won't go to that chart. I want to do as less movements as I can on the chart because of my collarbone fracture. So, but in this case, we're just looking for a move lower. Now, we see that little move up through here does appear to be in 3 waves that we were looking for yesterday, and we were looking at this as 1, 2, 3, 4, 5 here. So it does appear we've got 5 here and 3 here, but it would be nice to have the 800 here as the retested resistance, wouldn't it? So in that instance, we're coming down, we're going to go back for the little bounce. We know we had a look at the S&P 500 little count and the triple Q, so we know what kind of pattern we got in there, and then we want to get that as the resistance here. So that would be, it's not the best trade, but it's what I call the safe trade. And then you put that under there, 1 point below the low, and also have a look at what number that you're working with over here. The good thing about the trading levels is that they bring your attention to the price, and when you do that, you start learning other things about the price. Yeah, but if you shorted this anywhere in here below this, the stop would need to go above the 2 here, okay? Because at that point I would be wrong, and you may as well be long at that point. And Friday can produce a bullish market, so that's what we need to be, mindful of. So I can just put that across the top there for that as well, because that's the point I would be wrong, and that goes with all the positions that we've got. So yeah, moving along a little bit. So I think they've changed the name to Block now, haven't they? Square. So I did have a low in here, and I was okay with that, but I don't know if it's the case, I was hoping to get a nice ABC pattern here. I've got one that I can fit in here as an A and a B and a C, but it's a bit of a long shot, and just to me it looks impulsive to the downside. So we need to be a little bit careful. We need to play it in both ways, you know. So yesterday we looked at what we're doing yesterday, looking for the market to come up into this box here. Now I can get 5 waves up here if I include this little one here, but it's kind of small in relationship to this one and this one. And here we can see that we've got 1, 2, 3, 4, 5 here. So what we can do is we can simply look to go short under here and just make it a smaller position, and then look for the 100 to deliver the resistance as well, so you're not overexposed. But at the same time it should have done its business here, so at the same time we can go long at this point. So that's how that would play out. So we can look at all of this coming down here as wave 1 and coming back for wave 2 in the box. It's possible to count that up as 5 waves, so we could go up, but this little move here is telling me that it looks like we need to be going down. So there's a different mixed signals in this space at the moment. You know, normally I like to go short if the closest largest number is the resistance, so I would look to go short under here, but I'm just trying to get you in a little bit earlier. But just make them smaller positions if that's the case, you know. And, you know, if you're long in this market because you're holding shares in this market, well then just look to hedge, you know. If your trading platform doesn't allow you to you know, hold opposite positions or all that sort of thing, or you can't sort of access, well then look for another market that's the same and hedge it in some other way. Rightio, so that's that. And the banks, so this is Morgan's here obviously, and it's on the monthly chart here, and I'm just leaving it here so we could just continue to look at it. We're expecting it to come down further, so yeah, they're all kind of the same. So if I just go to BAC here, we can look at this here. We're also looking for a rally, and it's a little bit, you know, it's a little bit tough to see this one, but we would have to look at this as down for 1 here and back for 2 at this point, and this would be down for 1 here and going back for 2. We're at $40 here, so if you wanted to short this, you just look for a classic trading levels pattern under the 40. That would be the sensible thing to do, to have that number on your side. So yeah, that's where we are with that, and we'll be looking for further downside here. Once again, if this top gets taken out here, well then you can be long there because I'd be wrong. And then you've got that as a nice tested support. The market's come down, tested it, gone up for 1, back for 2 maybe. Looks like it's 5 waves down though, but it could be an A wave, a B wave and a C wave, and then go up from that point. So yeah, to short this. So we're looking for further downside in markets, and we just want to find the best way in. And you know, each one is a little bit different, but yeah, it's good if the market's around a nice big number, because then you can use that, because the orders need to place pressure on the market for it to go down, and they'll all work from the closest largest number. And Goldman's is the same as well. I won't go into a big story here, but we've got an A wave, a B wave and a C wave here, then down for 1, and we're looking back for 2. In this case here, you can see that we've got a nice little 5 down for 3, 4, and 1, 2, 3, 4, 5. So it looks like, even though I'm talking that we're going to have a bearish market, right? The reality is, in some cases, we still need to have an ABC pattern up here for this before it's coming down again. So it's going to show, even though I'm talking bearish, in some cases it's going to look like the market's a positive and I've got it wrong. Yeah, but we've been through this pattern with most of the indices, and it is corrective. I mean, it's possible in some cases like this, we can look it up for 1 here, back for 2 here. Yeah, probably 3 in here, and 4 and 5. I don't need to take that into play here. So you can squeeze 5 waves out of some of these, but at the same time, in this case, we do have 5 waves here. So that's a bit of a puzzle, isn't it? So, yeah. But in this case here with this market, the safe trade is just under here. If you get a nice B wave, you know, something you can identify with, then you can look to short that as well. You can also use the levels over here to add positions as well. So when the number 2 here becomes the resistance, when this becomes the resistance, and then you've got 3 here, you might want to take some profit off on here, and because it'll get a bit bouncy, and then look for the short trade under here again. You know, it's all about managing the risk. That's what it comes down to. So the money will take care of itself, the profits will take care of itself, but it's how much money can you lose that you need to be more concerned about, rather than how much you can make. Rightio, well, I'll leave it all at that. So thanks for tuning in, much appreciated, and enjoy the weekend. Cheers.